Hey there, fellow investors. Today, we're diving deep into the world of momentum investing. Before we get started, I want to make it clear that we here at Investor Central don't actually recommend this strategy. We're covering it purely for educational purposes so you can understand all the different approaches out there. Now, let's ride this investment wave and see what momentum investing is all about. Momentum investing is like catching a wave in the stock market. It's all about identifying stocks that are on the rise and jumping on board before they reach their peak. Think of it as the investment world's version of the trend is your friend. Now, you might be wondering, isn't this just chasing performance? Well, not exactly. Momentum investing is a systematic approach backed by decades of research and real-world results. It's not about blindly following the crowd, but rather using data and trends to make informed decisions. The concept of momentum investing isn't new. In fact, it dates back to the 18th century when David Ricardo advised investors to cut short your losses and let your profits run on. These are the core principles of momentum investing. But it wasn't until the late 20th century that momentum investing really gained traction in the academic world. Researchers discovered that stocks that had performed well in the recent past tended to continue performing well in the short term. It's like a snowball effect. Once a stock starts gaining momentum, it often keeps rolling. So, how does momentum investing work in practice? Well, there are two main types: relative momentum and absolute momentum. Relative momentum compares stocks against each other, while absolute momentum looks at a stock's performance against its own history. Let's break it down with an example. Imagine you're looking at two tech stocks, Tech Giant and Innovate Corp. Tech Giant has been steadily climbing for the past 6 months, while Innovate Corp has been bouncing up and down. A relative momentum strategy might favor Tech Giant because it's outperforming its peer. An absolute momentum strategy, on the other hand, would look at whether Tech Giant is trading above its own moving average. Now, you might be thinking, this sounds great in theory, but does it actually work? The short answer is yes, but with some caveats. Momentum strategies have shown impressive results in backtests and academic studies. However, like any investment strategy, it's not without its challenges. One of the biggest hurdles for momentum investors is high turnover. Because you're constantly trying to ride the latest trends, you might find yourself buying and selling stocks more frequently than with other strategies. This can lead to higher transaction costs and potentially more taxes if you're trading in a taxable account. Another challenge is knowing when to sell. Remember, momentum is all about trends, and trends don't last forever. A good momentum investor needs to have a disciplined approach to selling, whether that's based on time, performance, or other factors. Let's talk about some real-world applications. Say you're interested in sector rotation, moving your investments between different sectors of the economy based on which ones are performing best. A momentum strategy might have you overweight technology stocks during a tech boom, then shift to healthcare stocks when that sector starts outperforming. Or maybe you're more interested in individual stocks. A momentum strategy might have you looking for stocks making new 52-week highs, or those with strong earnings growth and increasing trading volume. The key is to find stocks that are not just performing well, but showing signs of continued strength. Now, I know what some of you might be thinking. Isn't this just a fancy way of saying buy high, sell higher? And you're not entirely wrong. But remember, momentum investing isn't about buying at any price. It's about identifying trends and riding them for as long as they last. One of my favorite analogies for momentum investing is surfing. When you're out in the ocean, you don't try to create waves. You look for the ones that are already forming and ride them. That's what momentum investing is all about. You're not trying to predict which stocks will become winners. You're identifying the ones that are already winning and hopping on for the ride. But just like surfing, timing is everything. Get in too early and you might miss the wave entirely. Get out too late and you could wipe out. That's why successful momentum investing requires constant vigilance and a willingness to adapt to changing market conditions. Now, I want to be clear. Momentum investing isn't for everyone. It requires a certain tolerance for risk and the ability to act decisively. If you're the type of investor who likes to buy and hold for the long term, Momentum strategies might not be your cup of tea, but if you're comfortable with a more active approach and have the time to dedicate to monitoring your investments, momentum could be a powerful tool in your investing toolkit. One thing I love about momentum investing is how versatile it is. You can apply momentum principles to stocks, bonds, commodities, currencies, pretty much any asset class you can think of. Some investors even use momentum to switch between different investment styles, moving between growth and value strategies based on which one has the most. Well, momentum. But here's the thing. Momentum investing isn't just about following a set of rules. It's about understanding market psychology and investor behavior. When you invest based on momentum, you're essentially betting that other investors will continue to push prices in the same direction. It's a strategy that requires both analytical skills and a good understanding of human nature. I remember when I first started exploring momentum strategies. I was skeptical at first. It seemed too simple to be effective. But the more I dug into the research and tested different approaches, the more convinced I became of its potential. Of course, like any strategy, it's had its ups and downs. But overall, incorporating momentum into my investing approach has been a game changer. One word of caution, though. Momentum investing requires discipline. It's easy to get caught up in the excitement of a rising stock and hold on too long, or to panic and sell at the first sign of a downturn. That's why having a clear, rules-based system is so important. It helps take emotion out of the equation and keeps you focused on the data. So, there you have it, a deep dive into the world of momentum investing. Whether you decide to incorporate momentum strategies into your own investing or not, understanding this approach can give you valuable insights into market behavior and trends. Remember, investing is a personal journey, and what works for one person might not work for another. The key is to find an approach that aligns with your goals, risk tolerance, and lifestyle. And hey, if you decide to give momentum investing a try, who knows? You might just catch the wave of a lifetime. If you enjoyed this video, don't forget to like, comment, and subscribe for more investing insights. And hey, let me know in the comments, have you ever used momentum strategies in your own investing? I'd love to hear about your experiences. Until next time, happy investing, and may the momentum be with you.